Significant headwinds have dragged building products maker James Hardie deep into the red. The company reported an annual loss of more than $300 million as it battled a weak American housing market and higher prices for some of its inputs. It's also been left with a $320 million charge, courtesy of an unsuccessful court battle with the tax office. Here's Philip Lasker.
It's still not easy trying to make a buck in America's housing market, which was the epicentre of the global financial crisis.
We're just finding it very hard in this market to grow the business.
But there were improvements.
I think there's been a number of new product initiatives and marketing initiatives, and as well as a relentless focus on cost.
That focus still saw operating profit down 12% for the year, but after accounting for the asbestos and tax charges, there was a bottom-line loss of nearly $330 million. Some of those costs related to James Hardie's move to Ireland from the Netherlands, where the promised tax benefits failed to materialise.
It's a better move and it's much more transparent. And we're seeing that really for us, what was a pleasing reduction in the forecast effective tax rate, which will be below 30%, and it's been stubbornly above that for the last few years, which is kind of ironic, when you move your domicile to a lower tax regime.
What was not so pleasing was the forecast for the United States, where the company makes more than 70% of its money.
We have some idea what's coming, and we don't think it's going to be a worse year in new construction, but we don't think it's going to be much better, if it's better at all.
Given their expectation last year for a more rapid improvement and a recovery, at least not manifesting itself, they probably are taking the conservative path and have an expectation that it is going to probably be a reasonably flat, maybe marginally up year. But I think commentators, including ourselves, would probably see some of the ingredients for a slow but steady recovery beginning to fall into place.
The US weakness was partially offset by the performance in Asia and the strong Australian dollar.
That's obviously helped us in the translation of our Asia-Pac earnings, given the dependence particularly on the Australian business in that Asia-Pac earnings mix. It's had an unfavourable impact from the translation of the asbestos liability.
And the company's contribution to the asbestos fund has been cut back next year thanks to that huge tax charge. Investors, though, will be rewarded with a dividend and a buyback.
I think the dividend being turned back on is quite a signal about the predictability of cash flows going forward, notwithstanding a tough US housing market.
Typical signal in the context of a buyback is a view that their shares are undervalued, and to the extent that they are signalling a weak year ahead, it is probably a reasonable capital management strategy to deploy.
And further cost cuts are also on the agenda, while James Hardie waits for the US housing recovery to take hold.